Today on the Blockchain Report, Bitcoin sunk down to 103K. Uh-oh! And it might be because Wall Street's biggest banks are warning of a 10% market correction, which is basically their way of saying don't panic, but maybe panic. Dick Cheney, the man who treated the vice presidency like a military campaign, has passed away at 84, leaving behind a legacy, a pacemaker, and one of the strangest political glow-ups in history. And a new $20,000 home robot promises to do your chores for you. Just don't mind the human operator watching you fold laundry through its eyes. All that and more on today's show. Let's go. Good morning, my Bitcoin believers and hopium hodlers. Welcome back to another episode of the Blockchain Report. I'm Hank Hudson, coming to you live from the beautiful yet incredibly overpriced city of San Francisco, California. Now, before we dive headfirst in today's circus of billion-dollar tax refunds and humanoid housekeepers, let's do the thing. Hit that subscribe button. Make sure you're following RoxomTV, the Blockchain Report, and me at Hank at RoxomTV, wherever you choose to do your doom scrolling. All right, it is time to check in on how Bitcoin is doing this morning. So let's take a peek in our market rundown. Let's go. All right, guys, this morning Bitcoin has plummeted down to that 103K mark. Is it over? Is Bitcoin finally over? No, it's not. We're just seeing a little pullback right now. We are down about nearly 3.5% in just the last 24 hours. A lot of macro effects happening right now. A lot of earnings reports this weekend, the trade deal with China, a lot up in the air, and the market is feeling a little jittery right now, and the Bitcoin price certainly is reflective of that. And we'll get into that and more in just a little bit, but right now we got to get started with our bull run, which we'll get going with right after this quick break, so stay tuned. All right, welcome back. It is time for this morning's Bull Run, where we go over the top stories of the day. And joining us for our Bull Run this morning, we got a special guest who's going to help us break down today's biggest news in the markets. This person, he has been building at the intersection of blockchain, regulation, and real-world finance, helping bridge the gap between traditional markets and tokenized innovation. A true builder, a sharp thinker, and a friend of the show. Let's give a big Blockchain Report welcome back to Arnab Naskar of Stokr, everybody. Welcome back, Arnab. Great to see ya. How have you been? It's been a minute since we saw you last. What's been going on in your world since we had you on the show?
And I think it's a perfect day to be here when the market is kind of testing its resilience and seeing who are the diamond hands.
Yeah.
And yes, Stokr has been doing great. We have grown massively, and yeah, glad to be back.
Amazing. Well, I'm excited to talk a little bit more about Stokr later in the program, but we have got some stories to go over today, my friend. So I'm going to read it, I'm going to call you back, and we're going to chat about it. Sound good?
Perfect. Looking forward.
All right, let's do it. Beautiful. All right, our first one, let's get started here, gang. If last week's crypto flows were a movie, Bitcoin ETFs played the stressed parent, and Solana showed up as the kid running around with a sugar high. As according to CoinShares US, Bitcoin ETFs saw about $946 million in outflows over the week. The iShares Bitcoin Trust, IBIT, took the biggest hit with around $400 million walking out the door all by itself. Across all digital asset funds, net outflows were a more modest $360 million, which tells you something interesting right away. Bitcoin ETFs in the US were bleeding, but money was not leaving the asset class entirely. Some of it was moving geographically, and some of it was rotating into other coins. European issuers in Germany and Switzerland logged more than $30 million in inflows. Canada and Australia added another 8.5 mil and 7.2 million respectively. So while American products were in take profits or de-risk mode, other regions were quietly buying the dip. The real attention grabber, though, was Solana. Solana-based ETFs pulled in about $421 million in a week, helped by a newly launched U.S. funds that arrived with maximum hype. So while Bitcoin ETFs were experiencing middle-aged outflows, Solana ETFs were in freshman orientation, handing out free t-shirts and collecting signups. Solana ETFs are very much the hot new toy on Wall Street, pulling in hundreds of millions of dollars as traders. Underneath all that noise, though, it is still Bitcoin setting the overall tone. But for now, the flows are reminding everyone that this market is global, rotational, and occasionally petty enough to chase shiny objects for a week at a time. All right, bringing Arnab back. Arnab, when you see nearly $1 billion flow out of US Bitcoin ETFs, but inflows in Europe and Asia, what's your read on that rotation? What does that really mean? Is this a healthy global rebalancing or signs of US traders taking profits too soon? What do you think's going on?
I think this cycle has been very interesting, right? Because I think we are kind of breaking this 4-year cycle that we always talk about in Bitcoin.
Yeah.
And this Bitcoin ETF, if you've seen, this has drastically changed the market. From a bigger picture, I think we always get lost in the smaller picture. The big picture is it's 150 billion AUM product, right? The Bitcoin ETFs, and it's one of the largest ETF segment in the world. And I think what is the market, if you see also global macro, right? The people are trying to, take some profits out, readjust arrangements in the market and all these things. And I think the current price correction, which you see around 104,000, it's not as big. And I think the market is, and Bitcoin shows quite a lot of resilience in the market, right? What I see kind of bigger picture is in the last couple of weeks, definitely there are some outflows, but the wider picture, the net inflows is much more higher. And I also will be very careful to come to conclusion that institutional interest is going out of Bitcoin. Definitely it's not the case. And I would say it's kind of some guys are trying to take out some profits. We have global macro uncertainty. So it's just, I think, I would say, a blip in the market.
Yeah, absolutely. And I think, this market, this cycle has been different as we are seeing a lot of the Bitcoin change hands, right? It's going from those retail investors that have been hodling oftentimes for a very long time and they're finally ready to cash out because life happens and you need money. And then it's going right into hands of these institutional investors that we expect to buy and hold for the long term, which is certainly changing the foundation of Bitcoin's ecosystem in a different way than we hadn't seen previously. And with these kinds of ETF outflows that we've seen, do you think they actually impact Bitcoin's price in the short term? Or are we just kind of watching sentiment slosh between regions like a wave pool right now? Because there are a lot of interesting macro factors at play that are clearly having an effect on the market.
I think definitely this is kind of, I would say, seasonal factors, right? We have all the tariff-related uncertainties. We have I think there is a huge market discussion going on around the global equity market to go down around 10%, right? That's a big impact, right, for the entire segment, right? But if you see the Bitcoin still kind of holding around 100K price, it's 104K, it's amazing, right? And for I still have the laser eye picture on my profile, and we believe the Bitcoin to go to 100K for a long time, and still in this uncertainty market, the Bitcoin is still at 104. So this is fantastic, I would say. So I think institutional adoption, as you rightly mentioned, these guys are not going to leave Bitcoin in a short term. I think in the shorter time frame, these guys are still there. And we are seeing a lot of pension funds, institutions. There's a very interesting development that happened in Europe from Luxembourg, effectively. The Luxembourgish government fund is effectively buying Bitcoin, which is quite interesting, right? So I think this institutional development will be quite key. And in the next couple of months, I'm expecting more and more larger public institutions are coming and buying Bitcoin, and not only the Bitcoin treasury like MicroStrategy, 21, BSTR, all these guys are accumulating kind of buying a BTC on the market, but I will see more and more pension funds, state funds are trying to buy Bitcoin because, Bitcoin is a hurdle rate.
Yeah, it is. And, I think right now people are freaking out like, hey, this was supposed to be, October and Q4. But really, we got to kind of pull back a little. And we're seeing all this money change hands. We're seeing crazy macro factors that in the past would have probably tanked Bitcoin's price in a way that's not even close to what we're seeing now. I mean, this trade war with China is still on the tip of everyone's tongue, despite the lip service we've been getting from the government recently. We have the United States government's been in a shutdown for 34 days now. There's just so many other bigger factors at play that I think are affecting the price negatively right now. But really, I think it's shown a lot of resilience considering all of the macro chaos we've been seeing in the meantime. And as maybe part of a result of that, we're seeing Solana ETFs just pull in $400 million in a week. Do you see that as genuine diversification by institutions, or is that just short-term hype chasing the altcoin of the month right now? Because all of a sudden, Solana seems to be the darling of the ball, but this feels like altcoin chasing to me. What do you think?
Yeah, the thing is that with Solana, the market is too small, right? So any movements can be a concerted effort. I'm not saying it is, but there is a high likelihood. But if you see the holders of Bitcoin and compared to, when the market moves, because we remember the FTX saga for Solana, right? One large player falls and Solana kind of is nearly wiped out, right? So this kind of altcoins have very less resilience, I would say, in the market, right? Compared to Bitcoin. So definitely, some guys will go in. There's opportunity trades they can make in, but for a longer time horizon, for kind of gold-like store of value asset, I think Bitcoin is undeniable the alternative asset. And this is an asset that is, it's growing. It's a 1 trillion plus AUM, and this is growing. And I think more and more, I think the dollar coming in institutional capital, this is an asset class that will compete with real estate, gold, and likes of those kind of asset classes.
Yeah, it certainly seems to be trending in that direction. And Arnab, since Stokr is based in Europe, are you seeing more interest from European funds or family offices using tokenized or ETF style exposure to accumulate Bitcoin right now? Like, what is that looking like to you on your end of the pond?
I think, to be honest, the US is still leading the entire discussion of Bitcoin adoption, institutional level. But I think what I just mentioned about Luxembourg, it's a very interesting news. You see also in French Parliament and few other jurisdictions in Europe, they're talking very seriously in the political level to include Bitcoin in some policy discussion. And I think one of the Europe's opportunity right now that we have is Europe is struggling to have energy infrastructure, right? Energy infrastructure will be key for if you talk about AI or any growth in terms of civilization, right? And Bitcoin has the opportunity, or I would say capability, to support that creation of energy infrastructure. And this is what I think Europe need to really see a little bit wider and progressive way, that using the energy infrastructure and mining, and that will be effectively for a state's way to accumulate more Bitcoin, right? Because there are a lot of energy infrastructure that is still not connected to the grid, and how you can connect those infrastructures with the mining operations, and effectively those Bitcoin mined can be a part of the treasury. That's a very interesting way to issue a bit bond or likes of them. But I still see the lack of such kind of discussions. So I think Europe is more at the moment concerned about issuing state stablecoins and the Euro CBDCs. But I think there are some parliamentarians or some politicians that are really understanding the value of Bitcoin and effectively putting it as a treasury asset. And I think more and more discussion, I'm hoping that it will go in that direction.
Yeah, it certainly seems like it is heading that way. I think didn't France recently just have they proposed I think a Bitcoin strategic reserve of their own of some kind. So I think the winds of change are certainly heading that way. But as we know, government runs at a snail's pace, so it's probably going to take some time. And final thing I want to talk about with regards to this story is the global rotation that we're seeing right now. What does that tell us about Bitcoin's market? Is it maturing right now, or is it just that there's a world of gamblers out there that are getting more geographically diversified right now, as we're seeing money shift out of Bitcoin in the United States, but seemingly shift into it in parts of Europe? Like, what is that telling you at this juncture?
No, I think if you see the global capital market, it is very fragmented, right? There is no harmonized capital markets, and different markets have different borrowing rates. And I definitely see Bitcoin ETF as an interesting way, interesting asset class, which can be used as collateral, right? At the moment, already we consider and we are providing Bitcoin-backed loans through our some other structures. And the market demand for Bitcoin-backed loans in the last couple of years have increased, but these are primarily driven by retail. But when you talk about institutional demand, they will still go for ETFs as collateral and borrow against those ETFs collateral if they want to borrow, right? And those borrowing rates will be different in Japan than in US or in Switzerland, right? It depends on local currencies, strength of the currency, and the interest rate. So I definitely see a lot of opportunity trades are also happening. In that way, I don't have a concrete data, but there are some conversations that we had in the past that indicates in that side. But on the other side, also it comes in effectively some tax regime, some readjustment. Some guys are also trying to pull in some capital, book some profits out because they're expecting some market to shift. But overall, if I see is we are heading towards some good amount of interest cuts in the next couple of quarters. So we are expecting the market to readjust. The interest rate cannot be so high for so long, right? And there need to be some adjustment. The moment it starts happening, we will see a lot of institutional demand in Bitcoin back again, because the market will understand, and this is one of the best performing asset class out there.
Yeah, and that's another thing too. Last week Jerome Powell came out with the rate cut, but then kind of had a bit of a hawkish tone, and we kind of assumed there'd be a second one coming this year, but now it sounds like that's not a for sure thing, and that's definitely affecting current price levels and whatnot. So, still up and to the right is what's going to be happening here, but it might seemingly happen a little bit more slowly than some of us might have hoped. At least that's what it feels like right now. But we'll see how it goes, because there is some good news coming, and I want to talk about that right now. So stay tuned, Arnab. I'll be back with you in a second, because JP Morgan strategist David Kelly says a wave of massive tax refunds are coming in 2026. Because nothing says economic stability quite like the IRS accidentally giving everyone a stimulus check again. Kelly says it's all thanks to Trump's one big, beautiful bill, which retroactively lowers taxes for 2025. The twist here? The IRS isn't adjusting withholdings this year. So everyone's overpaying now, and they'll all get fat refunds later. Or in other words, the government's about to pull off the world's least intentional savings plan. The average refund is expected to jump from $3,100 to around $3,700. That's an extra $600, which is roughly 2 months of groceries or about 7 lattes, depending on where you live. Now, Kelly says it'll feel like another round of pandemic stimulus checks. And we all remember how that went. Inflation said thank you and then ate the economy for breakfast. So here's the setup here, gang. Trump's new tax cuts mostly benefit older and wealthier Americans. Big surprise. While his tariffs hit everyone else like a piñata. So for many people, that extra refund won't even make it past the self-checkout machine. Kelly's calling it Stimulus 2, Electric Boogaloo. Love that. He says inflation could tick back up to 3.5%, and all because Americans do what Americans do best, and that's take their refunds and spend every penny within 48 hours. We're bringing Arnab back. Arnab, if Americans suddenly get a mini stimulus in 2026, do you think some of that money ends up flowing into Bitcoin the way those 2020 COVID checks did?
It's a different market, right? In 2020, we saw quite a lot of boom in trading activities also for penny stocks and everything, right? This was a different market, right? People were stuck in at home. The market was still better because there was some reserve cash, you had some disposable income, but the market is now quite harsh, right? We saw the inflation has increased, the cost of living globally, I would say, in every market, depending on where you are, your cost of living have definitely increased, right? So maybe it will just reduce some of the credit card debts that you have taken in the last couple of months, but I'm not expecting that to go heavily into, as you mentioned, is creation of wealth angle, like investing in Bitcoin or stocks or like some of those kind of assets.
Mm-hmm. Yeah, it definitely feels like I understand the comparison here, but I think we're in a wholly different place. And a big part of it, too, that I think can't be ignored was the rise of Robinhood during that time, right? Like everybody on TikTok, everybody was recommending stocks, and all of a sudden there was this gamification of the financial markets, and people were just going crazy because we're all degenerates and we love to gamble. And this just feels different. Like you said, everything's a lot more expensive than what it used to be. And I could, SNAP benefits here in the United States just got cut in half for like millions, tens of millions of people. So I think there's a lot more desperation just to live rather than have the opportunity to invest somewhere or make a quick buck. And I just don't know if I see it playing out the same way as 2020, because there's just a lot of factors that are different, even though at first glance you think, oh, everybody's getting money back, they're going to spend it a certain way. I don't think it's going to play out that way this time, but we'll see. I don't know. I'm no oracle. And another, JP Morgan strategist also warned that this refund boom we could see could bump inflation back to 3.5%. Do you think markets, especially the Bitcoin markets, are ready for that, or will it catch them a little flat-footed this time? What do you think?
I think if you see every macroeconomic factor is directing to the fact there will be inflation coming, right? The question is how big the inflation activity will be this time. Is it something that central banks can solve it in a short to medium term or in long term? Because I think the central banks have used their tools excessively in the last couple of decades, right? And we are seeing the impact that they technically have no tools right now. Now, do we talk about a wider reset? It will be disastrous for the economy, but there is definitely some question is where does it end, right? It cannot be like things are increasing, not in price. It's actually the money is losing the value, right? As we like to say. So in that way, the Bitcoin is also not increasing in value. It's actually a dollar is getting devalued as we are speaking constantly. So the macroeconomic factor is definitely directing towards in every angle. It's an inflationary environment, right? And definitely the stimulus package will put in the direction. Now, the question is, does the government want to incentivize them to invest into some wealth creating assets? It doesn't have to be Bitcoin, but something else that generally helps them to generate some return. But as you rightly mentioned, the timing of such kind of reforms around Christmas and all these things is just to spend money, right? And move some more liquidity in the market so people can spend more, they can actually invest in the economy and all these things. So I'm not sure, does a handout really helps, or is just, is a patchwork for the economy?
Right. And for Bitcoin investors, Arnab, how do you interpret these kind of, let's call it stealth liquidity injections? Like, do they represent new buying power in the market, or is this just short-lived noise in a much bigger macro picture right now?
Usually what you have seen in the past also, most of the short-lived liquidity or something, they usually go to altcoins and some newer coins or newer asset classes, something which is very fancy, I would say much more, shiny, right? Bitcoin for a lot of people are not so shiny, right? They're already at 100K. They think, okay, it cannot be 200K the next day, but I can get a token at $1 and it can exit at $2 or something like that, right? That element Bitcoin doesn't have at the moment, that shininess, right? But for people who are willing to devote and educate themselves about money, understand the basics of economics, which is also a very small segment of people, right? For them, Bitcoin can be very interesting. So I'm not expecting a huge chunk of that definitely coming to the Bitcoin space, but what definitely I'm seeing is, and this is where we see the indication, right? We are seeing more smart money, institutional money is coming to Bitcoin, and effectively you are indirectly investing in Bitcoin if you're investing in companies like, let's say, MSTR, ones that in this S&P 500 and all this kind of structures. So you will be a passive Bitcoin investor. And this we see more and more as corporate treasuries are accepting Bitcoin. You will be a passive investor in most of these Bitcoin ETF products.
Yeah, and you make a good point about Bitcoin kind of has lost some of its luster as like the shiny object that people want to throw money into, probably because the price is so high right now, and that unit bias is very real. But I remember back during the COVID days, Bitcoin, I think it was either right before COVID or during COVID, was down to like, I think almost 3,000 or 5,000. So people perceived a lot more upside there. But now we're at 100K. People are like, well, if it goes to 200, I only make 100% of my money, but instead I can chase an altcoin like a Solana or something else, and maybe that alpha play is much higher for me. So you make a good point. The magical luster of Bitcoin isn't quite the same, especially since institutions have gotten in the race. It used to be kind of a FU to the man and everything, but now the man is a big part of it, and they own, I don't know if it's most of it, but a huge chunk of it right now. So it is a very different ecosystem compared to where we were just 5 years ago. And Arnab, if you were managing a tokenized fund on Stokr, how would you position around an event like this? Would you be playing defense because of the inflation risk, or offense because, hey, liquidity? Like, what do you think?
I think it's not about tokenized fund. I think every fund manager need to understand and have a deeper understanding of what Bitcoin is, right? Because I'm seeing there will be a growing trend that, first of all, you need to outperform Bitcoin return. This will be a very important metrics for a lot of fund managers. But on the other side, how they do it is every fund allocation where they are trying to get some double-digit return, they have some exposure to BTC or something like that. This I'm seeing more and more going to happen. Like, for example, if you have a treasury, like a T-bill, right? Most of the fund managers have access to T-bill because that's kind of a low risk cash effectively in that sense, right? You're not taking the bankruptcy risk of the bank. Bitcoin comes in a slightly different angle, that it's kind of gives you a buffer return. So if your core asset class does not perform beyond certain metrics, at least Bitcoin is there to support. And this is where I see more and more direction and discussions are going, because we are talking to a number of large asset managers quite regularly, and everybody on the earth right now are talking and at least have a proper education environment internally to understand what Bitcoin is and how that can be included in their strategies.
And the understanding of what Bitcoin is and what we are expecting from it in the future is something that's rapidly changing, especially this year. And that's what our next story is about. So I'm excited to chat with you about this one. So hang tight. We'll be back in a second, because the Bitcoin 4-year halving cycle, it had a good run, right, gang? But now Blockware Solutions is basically wheeling it out back and calling time of death. Old Yeller style, you know how that goes. Now, for years, the script was pretty much gospel in the Bitcoin ecosystem. Block reward cuts in half. There's a supply shock, parabolic blow off top, brutal 80% drawdown, and then repeat until you feel emotionally numb inside. Then in 2024 showed up and it refused to follow that script as Bitcoin broke all-time highs before the April halving, while US spot ETFs that launched in January vacuumed up billions in BTC week after week. Now, Blockware's 40-page report called Bitcoin Matures essentially says the halving is now background noise in a much louder macro stadium. So yes, the protocol still cuts supply in half, but in 2024, inflation moved from around 1.7% to 0.85%. Still a 50% reduction, but less than 1 percentage point in absolute terms. Meanwhile, ETFs are pulling $1 to $2 billion a week into Bitcoin, at least they had been. So the old halving supply shock is now competing with what some might call a bit of a fire hose, right? So the head of mining analytics, Mitchell Askew, we've had on the show, he actually had a pretty blunt take on this. He calls the impact of the reduced daily issuance negligible compared to the size of the institutional inflows. So his view is that Bitcoin has become a macro asset driven more by global liquidity and business cycles than one program date in the code. He points to 2020 as a liquidity story, not a halving story. Same with 2024. The stimulus checks, money printing, and ETF approvals did more than the halving ever could. And on top of that, ETFs now hold over 7% of all Bitcoin, about 1.4 million BTC, and those coins are parked with long-term allocators, not gamblers trying to flip tops and bottoms every week. If you add in corporate treasuries like Strategy and Tesla, plus sovereign and institutional buyers, and a huge chunk of supply is effectively locked away for years to come. That makes the old 80% nuclear winter bear market structurally harder to pull off. Now, Askew's answer to that, to what replaces the 4-year rhythm, is actually pretty simple. There is no fixed rhythm. Instead, he says you watch the Fed, the Dixie, ETF flows, and global liquidity. His base case is that today's mix, a Fed pause, softer dollar, and strong ETF momentum points toward Bitcoin's strength in 2026, but on a more macro asset schedule, not a halving countdown clock. Fintech strategist Armando Pantoja backs that up from the institutional side. He notes that as any asset matures, volatility compresses, and deep derivatives markets plus ETF flows smooth out a lot of the old retail drama. Now, Blockwar sums up the regime change like this. Old world, having supply shock, wild euphoric tops, devastating winter crashes. New world, liquidity-driven moves, drawdowns that are more like 50 than 80%, and a market increasingly dictated by Wall Street and central banks rather than calendar memes. They even say bear markets built on mass retail capitulation are becoming structurally obsolete because so much supply sits with players who are not selling because TikTok told them to. Their conclusion is about as subtle as a sledgehammer. The 4-year cycle is functionally dead. Bitcoin is now a high beta macro asset governed by Washington and Wall Street, not Satoshi's code. So halving parties can stay, but if you are still trading like it's 2016, your model is listening to a clock that the market stopped caring about. All right, bringing Arnab back. Arnab, do you buy this argument that Bitcoin's 4-year cycle is officially dead, or do you think the halving still matters even if it's just psychologically?
I think I lost you for a second. Yes. No, I totally agree. I think this is what we are seeing. No, I think I got the question. It's all good.
Okay.
So no, I totally agree with the point. I think this is what we are seeing, the demand of institutional growth in Bitcoin, or institutional demand of Bitcoin has massively grown. And this is what we are seeing, I think, market to value ratio, there's MVRV, that factor. To put it simply, for every dollar you put inside the Bitcoin economy, how much it grows in the market cap, right? In the 2013 cycle, which we saw around 8x kind of growth, so for every $1, you get 8x growth in the market cap, which definitely each halving cycle started going down. And 2024, 2025, what we are talking about is 1.7x to 2.5x, which is quite realistic. So if you see, this is, so we moved quite a lot, if you see, from 2013, where it's much more speculators are coming in. Then we had all the early adopters, intellectually motivated guys who thought Bitcoin has store of value and all those elements. They started pouring in money. A lot of individual billionaires were looking into it much more as a safe asset class, and kind of going to that direction. 2025 is a different story. And this all happened because of Bitcoin
Yeah.
ETF. And this is something like for those people who really worked hard on the Bitcoin ETF and made it happen, kudos to them, because that gave a huge inflow of institutional capital in Bitcoin, which effectively bought the current MVRV rate around this 1.5 to 2.5x, right? And that means if you see that angle, the Bitcoin price should effectively go around 219K to 300K in that range, right? Because a lot of institutional inflows are coming with ETFs, and I'm not taking for last couple of weeks where we have outflows, but if you see the wider in the entire year, huge amount of institutional capital has moved in. And now effectively you can track it, right? You don't need to go to exchanges and see this inflows because some data are not fully reliable, but now you have ETF data, which is very valuable, right? So which definitely I see is now, this is also like a lot of things happen in this cycle, right? We definitely have the halving, but after that we have the Bitcoin ETF. We have a government that is currently the US, which is supporting not only Bitcoin as an asset class and crypto as a wider asset class and digital asset as a wider asset class, but they went for creating this Bitcoin strategic reserve. It's a mind-blowing thing. It's a massive thing, right? Definitely, there are a lot of governmental regulations I understand is right now stuck because of all the government shutdown, but we're expecting all these stable coin bills and all these things to come up that will also unlock a lot of liquidity in digital assets market. Because if you see Bitcoin in that way, it's a 2 trillion asset class, right? And we have a real estate around 300 trillion plus. We have a equities market, which is 130 trillion plus asset classes. These asset classes will have intermixing with Bitcoin. So it will not be then 2 trillion, it will be much more bigger, right? And Bitcoin is as its own, it's an asset class now, right? Which is not just, this is just as some kids are trying to mine in their basement and just doing something, right? You have institutional mining infrastructure, right? Where gigawatts and gigawatts facilities are going into Bitcoin mining, right? Definitely, I see a lot of shift between and movement between AI data centers and Bitcoin data centers and Bitcoin mining infrastructure. But still, large Bitcoin miners are still making money and they're profitable and they're growing at a massive scale. So I see there is a huge opportunity effectively for the institutional, capital to come in and to grow the space. And I think the guys are spot on the fact that we are breaking out from this 4-year cycle. It's not stuck on this 4-year cycle of this, the halving reduces the block reward. Then we have kind of a downturn in the market. And then certain factors brings the price action to massive up, which is, to be honest, a little bit indicators that the market is still early. And now I'm quite confident to say that we have moved away from that side and moving into more, structured way, less growth, as we discussed a few minutes back, less shiny, but more sustainable.
Right. And I'd be curious from your perspective, Arnab, we saw what the ETFs have done for the Bitcoin price specifically in the last year and a half or so. What would you expect to happen if and when Bitcoin actually starts? Like if the United States were to come out tomorrow and said, hey, not only do we have a Bitcoin reserve, we're going to start actively accumulating Bitcoin. How big of an impact do you think that would have on the market? Would that be similar to what we saw with ETFs? It's just driving all this institutional adoption and kind of giving people the green light that, hey, it's safe to invest in these? Or would it be maybe something much bigger than that? How would you see that affecting the Bitcoin ecosystem if the US came out tomorrow and said, we're actively acquiring starting today?
No, I think it will have a, I would say, ripple effect, right? When US says something, it doesn't stay with US only, right? You have a lot of allies and the partners of US who will also adopt that as a strategy. So I see there is a good room that this will have a cascading effect for the entire economy. And this is an asset class that will massively grow. Now, the question is how they acquire, right? Is there a tax neutral way that the taxpayers doesn't get impacted, but there is a budget friendly way in that sense, right? Or like the kind of bid bonds and all these kind of things. Or one interesting way, which I see, is mining effectively, right? Because every nation state, and that's what Bhutan is doing, right? For a long time, Bhutan is using their sovereign infrastructures to mine Bitcoin and putting the BTC on their state treasury, right? I see this is where we are heading, right? This is what internally we discussed quite a lot on that topic, is now Bitcoin is not about institutions like pension funds or large cap companies, but it's a nation state game. And this is where it is going. More and more nation states are going into Bitcoin mining and they will accumulate more BTCs. And this is where the opportunity comes in. If you have to compete in that case, accumulating more BTC, You cannot go to the OTC market unless you are, deploying massive capital. I think still that opportunity is in the mining, because the cost of mining BTC is still you can find with the right energy price point at 50K. So effectively, you have a good, efficient way to accumulate more BTC, and maybe the nation states will adopt that as a strategy in the near to midterm strategy.
Yeah. Yeah, especially with, you have Donald Trump's son's ties with Hut 8 and American Bitcoin, the mining operation. So, it seems like something that's definitely in the works. I'd be curious if that's going to happen here in the United States, because it seems like Trump's already got his hand into one of those pockets. So is he really incentivized to have the United States to start mining Bitcoin, because it kind of cuts into his own, golden goose? But we'll see. And I definitely agree with you, though. We will be seeing like a lot of other sovereign nations using excess energy to mine Bitcoin. But until then, ETFs are kind of still the story. And Blockware, in the story we read, mentioned that ETFs currently hold about 7% of all the Bitcoin in existence. That's roughly 1.4 million BTC. So my question for you, Arnab, is, have institutional flows replaced Satoshi's code as Bitcoin's real supply schedule right now? Because this just feels so different than every cycle we've had in the past.
No, I think the Bitcoin is, if you see the white paper, and we just had a few days back the release of the white paper date in that sense, right? And it's a very interesting piece of not a technical document, but also a political statement, I would say, right? Because Bitcoin's biggest strength is Bitcoin is boring, right? It doesn't have to be sexy. It doesn't have to be cool, right? It just have to create a base financial infrastructure on which future generations or future era of money can be built, and money is being built, right? And this is where it comes in, right? The halving cycle is definitely programmed, and it will be there as it is. We will not change it. And this is the intent of Satoshi. And I think if you see the block size war and all these kind of things, the idea is to keep it as it is and see how the market develops. And this is where the free market economics comes in, right? The market decides the best course of action, and we let it happen, rather than going to the central bank route where we constantly interfere into the market and bring different strategies to course correct ourselves. Effectively, we don't know it in the future, it course corrects, or we kind of go to course disaster or not. But that's where Bitcoin gives us an opportunity to really follow the market and free market economics. And this is where I think the market economics goes. If it's an efficient asset class, an asset class that grows in value, institutions and the state would like to acquire. And this is where it goes. Now, here as an individual, the responsibility comes is do we want to run the node? Do you want to also have some solo mining infrastructure at our facilities? Though maybe it will not provide the hashing, reward immediately, but it has some wider context in network secure or something like that. You need to secure the network. And this is where I think Stokr also really is proud to say that we are helping a lot of miners effectively in the US to mine, because I think the mining will be a thing. It should be effectively a right that every individual has, every institution have a right to mine. And that's how Satoshi has designed, right? If you want to mine tomorrow, you have access to energy and access to chips, you can mine it, right? Nobody can stop it, unlike in stakings, where you are very much controlled with a few handful of holders, and you cannot break the chain effectively.
Right. And if we were to, if the halving no longer drives Bitcoin's rhythm the way we've seen in the past, I mean, it's like 94% of all Bitcoin has already been mined. Obviously, the halving rewards are cut in half every cycle, which makes me feel like it's not going to have quite the same impact. So if the halving no longer drives Bitcoin's rhythm, my question to you is, like, what ultimately replaces it? Are we now trading Bitcoin like gold, and it's based off of Fed policy, liquidity, and risk appetite? Or is there maybe something else? Like, how do you see this playing out?
I think if you see Satoshi's vision effectively in that sense, the halving reward or block rewards will not subsidize the miners for a long term, right? That was an, I would say, economic push in the initial phase of the Bitcoin infrastructure, right? But down the line, the fees, the transaction fees should be very relevant. And we are seeing actually, so there are definitely certain months where we saw kind of the blocks were going very empty and people were talking about it. And that's like one of the criticism that the market is having. Effectively, when you lock the Bitcoin in the ETF, it stays in the custody, and custodians are not incentivized to move the BTC from their cold storage, right? Effectively, what happens is just kind of paper Bitcoins are being traded, and there is no real on-chain transaction, which definitely impacts the miners' sustainability in terms of miners' resilience and miners' revenue generation. And there is a good metrics called hash price, and which you see even if the Bitcoin price is going up, we are kind of going down in hash price. That means miners profitability is going down, right? And this is an interesting metric that we follow quite closely. But given the fact is, this is what I quite believe is that Bitcoin has the room to effectively find the market fit on its own, and there is a free market economics kicks in. And we saw all the ordinals and all the discussions of bringing, different kind of files, different kind of functionalities. Now we are having the discussion about, should we filter, should we not filter? But I think effectively where it should go in that sense is let the Bitcoin infrastructure decide its own core path rather than imposing some filters or something like that, because the market will find its own way to bring transaction fees higher on Bitcoin layer. Because if we believe in the recklessness in money printing, if we believe in recklessness in all this geopolitical things that is happening around us, the Bitcoin is an asset class that will grow in value and that will attract more transactions, more infrastructure. And this is where I see is the market is heading effectively.
Yeah, I absolutely believe in government and federal recklessness. So I think you're 100% right, and it'll be interesting to see how that plays out over time. But I think you're on the right path, my friend. All right, stay tuned, Arnab. We got one more story here, and we're going to chat about it in a sec. Because Mastercard is reportedly ready to drop almost $2 billion to buy crypto infrastructure from Zero Hash. Because if you can't beat the future, you might as well swipe it. According to Fortune, the payments giant is in late-stage talks to acquire Zero Hash, a company that builds the rails for stablecoin payments, custody, and staking. The deal would be one of Mastercard's biggest crypto plays ever, basically buying the pipes that connect the old financial system to the new one. Now, Zero Hash is the company that lets fintechs and brokers like Interactive Brokers, DraftKings, and Stripe plug their crypto right into their apps. They even power Morgan Stanley's upcoming crypto trading rollout for E-Trade that'll be coming next year. So yeah, they're not some random startup. Zero Hash recently raised $104 million at a $1 billion valuation, and now Mastercard's offering to double that very number. Now the deal is seen as a massive bet on the stablecoin sector, especially after the US passed the Genius Act, which finally gave regulatory clarity to stablecoins backed by dollars. And Mastercard's been flirting with stablecoins for a while now. Earlier this year, they let customers spend stablecoins and merchants receive them. Then they partnered with MoonPay so your Mastercard could directly link to your stablecoin balance. They're not launching their own blockchain, but they're clearly gearing up to profit from everyone else's. It's also a strategic shot at Visa and a signal to the rest of TradFi that the crypto rails are very much here and the credit card giants are building their toll booths on top of them. Bringing Arnab back. Arnab, Mastercard spending $2 billion on a crypto infrastructure firm. That is not just dabbling, that is domination. What's your first read on this big move?
It's interesting. I still remember the days when the Tether was being criticized by everybody in the space, telling that market, it's not sustainable. The stable coins is just a blip and there is a use case of that. And the banking infrastructure is perfectly well suited to provide all the transactions per second as Stripe and all these guys are doing. And Visas are providing millions of transactions per second. But what we kind of fail to understand, and where players like Tether really understood, is stablecoin is not just an asset class play. It's an infrastructure play. What you're creating is effectively creating an infrastructure similar to Swift and all these things, where it's not just a messaging layer, but it's an infrastructure where you can move money as well as the value on a real-time basis, right? And this is where it comes in, right? I think the stable coins is the most widely accepted use case of the blockchain at the moment. And this is where I see the biggest use case of blockchain is effectively the stable coins, right? Right after Bitcoin. And this you see in the market cap effectively, right? Is a Bitcoin, and then in the top three comes as a stable coin market cap. And this M&A is definitely right on time, because we are seeing quite a lot of move in the public markets. We saw Securitize going public via SPAC. We see some Stripe acquisition a couple of months back. We saw that. Now we have Zero Hash. They are actually providing a lot of payment processing capacity for players like Biddle, Securitize, Republic. And this is where it's heading, right? This is where Stokr is also believing is effectively the future capital markets and payments market will connect to each other. And you will move the securities on an atomic level on the blockchain along with the money. And to move that, you need to have both money and the securities on chain. And this is where effectively the transition can happen. And the Mastercard is understanding the fact, and this entire acquisition, if you see, the investors who came in at a zero hash in just 1 billion just a few months back, they're about to get around like 1.5 to 2 billion in just a couple of few quarters. That's fascinating for the industry. That shows, the industry is maturing, and the bigger players are understanding that it's not, they don't have the time to compete and create infrastructure, rather acquire the companies that are kind of the pioneers in the space and grow it from there.
Yeah, no, that makes a lot of sense. And do you feel like, is this story bigger for stablecoins or is it bigger for crypto regulation right now? Because Mastercard clearly is aiming to profit from both of them. What do you think?
No, I think it's definitely. I think the stable coin, if you see how it's evolved, it's not just a mean of right now to move out of Bitcoin and just hold in cash in a secure way without going to a bank. I think stable coin now is moving to the phase where stable coin will be a big, I would say, absorption capacity for US Treasury bill, right, or the US debt. And this is where I think the Trump's administration is really looking into it, that how stablecoin can be an efficient way to bring dollars into the economies, emerging economies where the access to dollar is limited. So effectively, it helps the dollar penetrating different markets where via traditional rails, dollar could not penetrate. That has a massive opportunity, right? And MasterCard, I think, is understanding the fact. So going for a zero hash kind of infrastructure player, they're having the capacity not only to create a private blockchain kind of playbook, but rather going for on how to interact with the public markets and public blockchain infrastructure, maybe also interact with other publicly available stable coins and provide swapping features and the likes of them. So I think there's a lot of opportunities for MasterCard here, and they're understanding the strategic benefit of it.
Yeah, no, it seems like they're getting on the right page, but we all knew they would eventually as the Bitcoin price keeps its up into the right momentum. However, I just got word that Bitcoin has now dropped to 102K. We're really nearing that psychological support at 100. Are you thinking we're going beneath 100 at this point, Arnab? What are the tea leaves telling you that what we're going to be experiencing in the short term? Q4 was supposed to be all roses and sunshine, but it has been anything but since October.
Yeah, I think definitely when we see institutional outflows, that creates market sentiment issues, and also the OTCs kind of dries up, OTC demand side dries up, and you see the impact on the price. But if you see the global equities market, this definitely is, the market is not so uncorrelated. There is some correlations you can see still in the market. If you're the wider market, you're expecting such a huge correction. I will not be, surprised if Bitcoin doesn't see the corrections, because there are a lot of, interactions between the ETFs and the Bitcoin world and digital assets world. And also, this is where the market is. There is some movement of money, right? And this is what we are seeing. So I'm still expecting is, the Bitcoin may reach in this next couple of days or something to 100K, but it will again bounce back because the medium to longer outlook is much more, I would say, robust over there. Maybe in short term, we will see quite some movements because of different macroeconomic factor, which is not in our hand, right? Which is, there are a lot of geopolitical things are going on around us right now at the moment.
Right.
And we are not immune to that.
Yeah, between, we got still that war in Ukraine is still very much happening. We got trade tensions in China, Fed cuts rates that may or may not be happening. It feels like everything is on fire right now, so it's not the biggest surprise that Bitcoin's price has kind of come down in the last couple of weeks. And with that being said, we didn't get a chance to play with you last time, but you and I are going to play a really quick game. You ready?
Yeah, super. Yeah.
All right, let's do it. We're going to go to camera 3. So as we've mentioned ad nauseum during our talk here today, this has been a wild 2025 cycle, unprecedented, unlike anything we've seen before. And what we've been doing was we've been asking our favorite guests to give us for just shits and giggles, as they say, their price prediction for the end of this year. So we're asking, what will Bitcoin's price be December 31st? The clock strikes midnight. Where are we at? Now, you have the advantage of going a little bit later than we had some of these other guesses. So right now, we're at 102. On the right side here, you can see some of our previous guests and their guesses. So they go as high as Knut Svanholm says 443,000, God willing. And then we have some more on the conservative end. You can see I'm at about 142. We've got Grant Cardone was around 134. And whoever gets closest to that price, we're going to send a personalized Roxom Patagonia to at the end of this year. So the stakes could never be higher than they are right now. So with that being said, what do you think Bitcoin's price will be at come the end of this year, and why? What are your thoughts?
I think I'm going to win that, right? I have a very easy answer. It's one
Ooh.
Bitcoin is always one Bitcoin, right? That
No,
solves the
that's
debate,
not
right? It's
real.
one Bitcoin is one Bitcoin, right? So there's nothing can be, interesting there. But what's in, like where I see the current macro is effectively it's by the December, it should be somewhere closer to 120K. Because there is still some larger sell pressure there in the market, and we have also kind of the government shutdown is definitely impacting all the stablecoin regulations and all these things. But for me, is one strong indicators which I always see is what is a short and long on different platforms, right? And I still see kind of the
Right.
market is there is some interesting volume
So,
movements and reorganization. I'm seeing quite a lot happening. But on the other side, where I see is this year, a lot of things have happened, right? A lot of
yeah.
not only in the Bitcoin space and crypto space, but wider macro, there are a lot of things happened. So 150K is too ambitious for me at the moment. I think 120K it goes.
Yeah.
Definitely, I want to see how some of the Bitcoin treasury companies perform. Also, we see lately some of the Bitcoin treasury companies are going negative MNAV, right? So this is also another
Yeah.
shows that the capital market play of the Bitcoin treasuries are kind of taking a hit. But I'm quite hopeful by the end of the year, things will start looking a bit positive. But on the other side, you also see like the reason I'm a bit conservative there is there a lot of liquidation event can happen by the end of the year because market, a lot of positions gets closed and all these kind of things. So it's always a volatile period. But quite optimal,
Yeah.
I'm quite optimistic in the situation that it will be not below 100K, so it will be closer to 120K.
Okay, so we got you for 120K. Beautiful. I love it. Now, Arnav, before I know we're running late on time here, before we let you go, I know you and the team at Stokr have some pretty cool things going on, including you just passed a pretty amazing milestone. Last time we had you on the show, I think you guys had $1 billion in tokenized real world assets under your belt, and now it's something like 1.8, which is an astronomical growth than just a couple of months ago when we spoke to you. Tell us about what's going on at Stokr. We want to know.
Yeah, I think this year has been fantastic for us also, right? After the Vegas event, we announced that we had 1 billion AUM, total TVL, as you call it, is tokenized value locked in the market. This is the tokenized value that has been tokenized via our infrastructure. Now that size has reached 1.8 billion. And that metric is definitely we are quite proud of. But another metrics which we are quite proud of is the amount of dollar basis which we have paid out to the holders of tokenized securities in the last couple of years. That's right now around 280 million. And that's growing because Stokr is a tokenization platform. We are tokenizing real world assets, private credit, private debt kind of products, funds, those kind of fund units that provides fixed income return, like so those kind of assets. And we are tokenizing it on the Bitcoin infrastructure liquid network. And we are quite proud that we have grown massively despite being on the Bitcoin layer, which is a lot of people think, the liquidity is not there in Bitcoin. There is no innovation happening on the Bitcoin, but we can see that no, this is happening. And we are seeing a massive demand of Bitcoin capital markets products. And most of our products are also outperforming Bitcoin or providing very good return in dollar basis. And that investors are liking it. And they're getting the returns in Bitcoin or in stablecoin, right? This is the reason the Stokr as a platform, we process a larger stablecoin volume. So yeah, Stokr has been growing great. We have also launched a new product through our on our platform. It's TAS. It's end-to-end. So we are providing tokenization as an end-to-end solution to large asset managers or issuers. But now we are providing a white label solution, API first, to any large institutions who want to create their own tokenization products, but they don't want to use Stokr UI. They can use our API infrastructure that has been built in over 6 years of experience. We process large amount of Bitcoin transactions and all these things over the platform last couple of years. And that know-how, we have bundled it and put it in the task solution, as we call it, tokenization as a service.
Amazing. Well, it sounds like you guys have had a very fruitful 2025, as I'm certainly glad to hear. And I got to say, Arnav, I'm sure you have gained a lot of new fans yourself during your time on our show here today, as we always really appreciate you joining us to lend your insights and expertise. So for all of your new fans out there that are like, I like the cut of this Arnav guy's jib and I want to learn more about Stokr, what are the best places I can send them to learn more about you and what you and the team are doing over at Stokr?
I think you can go to Stokr page, stokr.io, or follow me on Twitter, or write me a DM, or drop me an email at arnab, ARNAB, at stokr.io, and happy to respond and reach out and connect.
Amazing. Well, Arnab, thank you so much for your time today. It's always an absolute treat having you here in the Blockchain Report. And hopefully next time I see you, I'll be fitting a nice Roxom Patagonia across those shoulders here, my friend. We appreciate you playing our game with us today and joining us to talk about the news, my friend. So thank you so much for your time, and we hope to see you again real soon, my friend.
Thank you. Thanks a lot. Thanks for having me, Hank.
Pleasure is all mine. Enjoy the rest of your week, bud. All right, we're taking a quick break here at the Blockchain Report, but when we come back, we got more of today's top news, including a robot that lives inside your house and maybe is spying on you? Well, you'll have to wait and find out. All that and more coming up when we're back.
Others, Bubble Boy. I'm a bit changed. This sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card. You can buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee, and right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com and you can learn more. All right, boys and girls, breaking news. Bitcoin is down to 101K. Now, hold on for a second. I'm not gonna do what everybody thinks I'm gonna do and freak out. I'm not. But right now, Bitcoin is still holding strong above that 100K psychological level of support. And I want to talk a little bit more about what is going on right now and what we can be expecting as we make our way through this first week of November. So let's hit the Bitcoin alpha charts and see how things are looking beneath the number right here. Okay, so let's take a peek. Let's get to it. Alrighty, gang. So right now it's time for a little bit of Bitcoin alpha. This is not financial advice. It's just my personal view of the market currently. So Bitcoin has cascaded down to around 101,200, and we've got 3 charts to break down that'll make more sense of where we are in this cycle. The first chart is our MVRVZ score. Then we have the bull market correction drawdowns and the net realized profit loss. Now together, these charts tell a story of a market that has cooled off, but might just be coiling for something bigger down the line, all right? So the first chart we got up here, this is the MVRV score. All right, this one compares Bitcoin's total market value to what everyone actually paid for their coins. So basically, it measures how overheated or underpriced Bitcoin really is. Right now, the score is around 1.78, okay? That's the lowest it's been since April of 2025, all right? That puts us right near the bottom of the current uptrend channel, all right? So let's see, right now, okay, so what if we're looking at here, you can see these red shaded zones here we have at the top. Here's one, here's another one. Those are the historical cycle peaks we saw in 2013, in 2017, and then in 2021, all of those right there, okay? Now you see those red zones, so every time Bitcoin entered this territory, the market was euphoric. There was mania everywhere, the signal of a true cycle top. Now in 2017 and 2021, the MBRV was up around 7 to 10. You see in this arena right here, here's 10, here's about 7. We were right in that area. All right. So right now, if you look over here, we're in this kind of rising green channel, right? You can see right here, I got this line showing. That's been our lane for most of this bull market, okay? Now, right now, we are testing some support levels, which you can see right over here, all right? If we bounce here, the bulls will say this is the reset before the next big leg up. But if it breaks down, it could be the first sign that the cycle is truly cooling off. Now, every Bitcoin top has happened when this orange line spiked into the red zone. Again, here, 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 and here, all right? And right now, we are nowhere near that. Look at all this space right here. We're nowhere close. That means either the next big move is still very much ahead, or this time the music stopped a little bit earlier than we expected. All right, so now we're going to go to chart number 2. This chart, okay, here we go. This is our bull market correction drawdowns chart. This chart shows how far Bitcoin usually drops during bull markets, or basically how painful the dip gets before the trend actually resumes. All right, so see these yellow circles here? We got one right here, one here, and one here, okay? Those mark drawdowns around 20 to 30%, which is exactly the kind of correction Bitcoin tends to see mid-cycle, okay? Next, even back in earlier cycles, if you look toward what we got, the red, the blue, and the green here in shaded sections, we had some similar pullbacks before the next big rallies, okay? So this isn't out of character by any means. It's actually right on schedule. If anything, we're missing that deeper flush. You know what I'm talking about, those 30% plus pullbacks that tend to shake out leverage and fake panic before the next breakout. So these yellow dips that we're seeing over here, okay, those are where Bitcoin clears the field. It's kind of a rinse cycle for over-leveraged traders. It's painful, but it's also very necessary, all right? And then we're going to chart number 3, all right? This third chart we're looking at is the net realized profit loss. This one measures how much profit or loss Bitcoin investors are actually realizing on chain. So basically showing when people are taking money off the table or panic selling into fear. All right, so see how these green profit spikes have been shrinking, and we have these yellow arrows here, shrinking, 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 okay? Each one is a little bit smaller than the one previously. So from here, a little smaller, a little smaller, a little smaller, a little smaller, a little smaller. So that's traders taking fewer gains, which means that enthusiasm in the market is generally fading, okay? And down here in these red ovals we see, right? That's where realized losses start overtaking profits. So those have historically marked the local bottoms when fear maxes out and smart money starts accumulating. All right. So right now we're back near that neutral zone here. Okay. There's the neutral zone. Profits are starting to dry up, but losses haven't fully kicked in yet, meaning we may need one more ouch moment before the market resets and moves higher. And based on the fact we are now almost below, we just cracked 100K, we might be in that ouch moment right now. Now, every time this chart goes flat like this, Bitcoin tends to load up before its next big move, which I'm signaling with this arrow here. All right, the only question is it up or down first? Right now, it kind of looks like we're in that reset pattern. We're almost at that psychological level of 100K, which hopefully means there is an uptick on the way. But let's go over what all of these actually mean, all right? So the MBRVZ score is sitting right on the support levels. The drawdowns are looking healthy, very much mid-cycle correction territory. And the profit loss that we just looked at shows that profits are fading, but there's no capitulation yet. So from a long-term view, the bull cycle is still very much intact, but it's short-term though, okay? And there's room for one last flush before the next push higher. Now, keep your eye on that 100K support level. It's the line that decides whether this is the dip before a new rally or the start of something uglier. Hope it's not that. So this is the part of the cycle, gang, where emotion drives faster than math. So stay calm, zoom out on the charts, and remember, Bitcoin's not dead until Twitter says so. We're taking a quick break, but when we're back, we got more of today's top stories on the way. So stay tuned. More Blockchain Report coming to you after this. All right, and we're back following more of this morning's breaking news as Bitcoin is having a rough one. They're down about 5% this morning, currently hovering just above that 100K level of psychological support. If you listen really closely, somewhere out there you can hear Peter Schiff with a megaphone on top of his soapbox telling everybody that Bitcoin's dead. Well, it's not. It's still six figures. Let's all just chill out here for a second, guys. But right now it has fallen considerably. A lot of macro chaos going on, and the market is not loving the idea of risk on assets currently in Bitcoin. Is definitely feeling that pain right now. So currently we're sitting around 101K, and we're taking a look at the Roxom X page to see what people's reactions are to this pretty substantial fall. We've flirted with the 100K level a couple of weeks ago during that flash crash. We were around 102. What's it right now? Just X. It's not Roxom. Oh, this is just X in general. Okay, my apology. I thought we were on the Roxom page. So let's take a look and see how people are reacting to this 100K-ish mark. Are everybody panicking right now, or are we using this as an opportunity to buy that dip and stack more Satoshis? Let's take a look. So right now, Hillbilly Hodl says, if you're not buying this dip, then just sell your Bitcoin and go away. So the conviction is strong with Hillbilly Hodl. I wonder if that's Just Dance Vance's private Bitcoin Twitter account or something. Let's see, what else we got here? Trading agent, let's see. Bitcoin 100K, Bitcoin is garbage. We've heard that before. Been here for 17 years, relax. What else we got here? Leveraged positions were wiped out. Bitcoin split 25% of its all-time high to 101K. So yeah, we've definitely seen some major pain here in the last couple of weeks. October did not fulfill its promises. What else we got here? Considering Bitcoin's dump the previous 2 days, MicroStrategy is performing well, allegedly. I think the stock is down. Yesterday I saw around 266, 270. Remember, this is a stock that I think was in the 400s. Hey, Michael, we haven't seen the angel Michael Saylor in a while. It's been a tough sled for a lot of the Bitcoin treasury companies the last couple of weeks. What else we got? This was only 4 minutes ago when Bitcoin was at 103,000. Diane Decrypt says Bitcoin is literally free. 2030 is only 4 years away, and the consensus is that Bitcoin will be over $1 million by then. So if you have that kind of conviction, gang, there has never been a better time to stack more Satoshis, because I tell you, any investment advisor in the world says, I got something that'll 10x for you in the next 4 years. Yeah, that's a good train to be on, so get on board, baby. What else we got here? Full volatility here. There are only a few days when you could get decent bargains. This could be one of those days as Bitcoin hovers around 100K. And we've heard it before here, gang. There are many people much smarter than me who are saying we may never see Bitcoin below 100 again. So if you're on an exchange and you see it slip below those 6 digits, this might be your last opportunity to get it that cheap. And we might never see those kinds of prices again. All right, so this is definitely an opportunity for those of you out there if you are feeling good and having conviction about where Bitcoin is going like we are. All right, what else we got here? Oh, that's just weird. This Harry Potter Obama thing. Whose feed is this? What are you following, Victor? What else we got here? Someone else saying they bought Bitcoin today. So, I mean, it's your typical mix of fear and opportunity in the market, right? The same people that have been bearish on Bitcoin since the jump are using this as an opportunity to tell the world that Bitcoin is dead, while the rest of us that have been here and are part of the Bitcoin ecosystem know all too darn well that this is ultimately just going to be another speed bump on Bitcoin's journey as it swallows the entire financial system. So this might be an opportunity for you to get a little slice of your pie of that financial future, because it's not coming, gang. It's already here. We've been at 6 digits now for months, all right? What else we got? All I can say is OMO. I don't know what that means. Of missing out? The kids slang these days, 6, 7, I don't know what the hell they're talking about. Officially, I'm old. Exactly the number one shitcoin, Bitcoin. Like I said, this is a perfect opportunity for these clowns to come out of the circus and yell from their soapboxes of why Bitcoin's dead. It's gonna be fine. Any other things we got here? Bitcoin, 100K, yeah, that's it. So again, gang, it's been a tumultuous couple days for Bitcoin's price, but the rails and the future of Bitcoin are still very much firmly in place, and they're not going anywhere. So let's all pump our brakes on the short-term price panic. It's all gonna be fine. We're gonna take a quick break, but when we're back, we got more of today's top stories here on the Blockchain Report, so stay tuned. We'll be back right after this quick message.
Others, Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
All right, welcome back. It's time for more of this morning's bull run, so let's get into it. Former Vice President Dick Cheney, the man who treated the vice presidency like a 4-star command post, has passed away at 84 from complications of pneumonia and long-term heart disease. His family says he passed surrounded by his wife and daughters. Cheney served 2 terms under George W. Bush, where he became the most influential vice president in modern history and one of the most divisive after 9/11. He was the architect of America's war on terror, pushing for the invasions of Afghanistan and Iraq, authorizing secret prisons and enhanced interrogation, and expanding presidential powers in ways still debated today. Critics called him the Dark Emperor of Washington. Supporters saw him as a patriot doing what he believed was necessary to protect the country. Cheney, for his part, never flinched. Even years later, he said he'd do it again in a minute. In his later years, he stunned his own party by turning his fire on current President Donald Trump, calling him a coward and the greatest threat to the republic. The man, once reviled by Democrats, ended up being applauded by them, a political plot twist even Hollywood wouldn't greenlight. Now, 5 heart attacks, a transplant, and 1 unfortunate hunting accident later, Cheney outlasted nearly all of his political peers. So whether you saw him as a defender of freedom or the godfather of the forever wars, one thing is for sure, Dick Cheney left a mark on American power that won't fade anytime soon. No doubt about that. Thoughts and prayers to him and his family. All right, in other news, today's election day in New York City, and it seems that, the Big Apple is about to elect a mayor who Donald Trump has called a far-left radical and a crazy communist, and Wall Street is having a mild heart palpitation about what that means for money markets and, of course, Bitcoin. As Zoran Mamdani is the Democratic frontrunner, and prediction markets give him around a 90+% chance of winning. His platform: freeze rents, raise taxes on the ultra-rich and corporations, build affordable housing, and make buses free. Which sounds great if you ride the bus, and less great if you own 12 buildings in Midtown Manhattan. Now, Mamdani wants to lift the top corporate tax rate to 11.5% and slap an extra 2% city tax on anyone earning over $1 million a year, which is roughly middle management in Manhattan at this point. His team says that could raise around $10 billion annually to fund childcare, transit, and housing. Now, when he won the primary, stocks tied to New York real estate like Flagstar, SL Green, and Vornado sagged as investors started gaming out what happens if you crank up taxes on the exact people paying 40% of the city's income tax. Now, Bitcoin is absolutely in the blast radius of this debate. Now, Mamdani has been openly skeptical of crypto, questioning who really gets hurt when exchanges collapse and pointing out that small investors, especially lower income and minority communities, tend to eat the losses while big players walk away scot-free. He also threw shade at his opponent, Andrew Cuomo, for his crypto ties, calling him basically a lobbyist for the industry after Cuomo pushed a chief innovation officer role to attract crypto and Web3 businesses. Now, at the same time, New York isn't some anti-tech cave. The state is actively regulating and building around digital assets, expanding blockchain analytics rules for banks, tightening crypto custody guidance, and even considering laws to accept government payments in crypto and tax digital asset trades. So what does a Mamdani victory likely mean? Well, not an instant exodus, but certainly more friction going forward. Think tighter compliance, extra scrutiny on platforms, and maybe more public grandstanding against speculative or predatory parts of the market, especially if that decides that protecting small investors is a political win. Now, for Bitcoin companies that can point to real utility, remittances, settlement rails, custody lending, and show that they're not scamming retail, there's probably still room to work with City Hall and state regulators. For pure casino tokens and number go up casinos, New York is probably not going to get more welcoming anytime soon. And back over on Wall Street, U.S. stock futures woke up, looked in the mirror this morning, and decided they might be too expensive, with a helpful nudge from some of Wall Street's biggest mouths. You see, Dow Jones futures fell around 0.7%, S&P futures dropped 1%, and NASDAQ futures slid roughly 1.3% after warning shots from Goldman Sachs and Morgan Stanley about a potential 10+% correction over the next 2 years. Now, when the guys who sell you stocks start saying maybe these are a bit rich, people start paying attention. Adding to the hangover, Palantir, one of the loudest AI hype machines in the market, dropped more than 6% in pre-market trading, even though its revenue guidance beat expectations. After a 400% run-up in just a year, good is no longer good enough. The market wants miraculous and a side of defies physics. The bigger issue here is this. People are starting to get nervous that the AI boom is turning into a circular trade, where companies spend billions of dollars on AI to convince investors to value them higher so they can raise more money to spend on AI, so investors, well, you get the idea. That kind of loop works great until someone asks, hey, where are the actual profits? Meanwhile, the Fed is doing its favorite thing, speaking in riddles. Chair Jerome Powell sounded cautious about more rate cuts in December, saying they're not a foregone conclusion, which is central banker speak for stop front-running my career, guys. Now, some Fed officials think policy is too tight. Others think inflation still bites too hard. And because of the government shutdown, they're all flying half blind without the usual stream of official data. Traders have dialed back the odds of a December cut from around 90% to 70%, which is still pretty high, but no longer the slam dunk the market was praying for. For Bitcoin, this kind of setup usually means more volatility ahead. If risk assets get hit hard, BTC can sell off alongside tech stocks in the short term because institutions tend to hit the sell everything with the chart button when the mood turns sour. And Elon Musk wants a pay package so big that it makes entire countries look underpaid, and Norway's giant sovereign wealth fund just hit him with a very calm and a very polite and a very Nordic, no thank you. Norway's $2 trillion oil fund turned index on planet Earth, run by Norges Bank, says it has already voted against Musk's proposed $1 trillion Tesla compensation plan ahead of the company's shareholder meeting. The fund owns about 1% of Tesla, roughly $11.6 billion worth. The Tesla board wants shareholders to sign off on a package that could hand Musk nearly $1 trillion in stock over the next decade if the company hits certain milestones and expands his voting power even more. Now, Norway's fund basically said, look, we appreciate the visionary value creation, but we're worried about the sheer size of the award, the dilution to other shareholders, and the fact that the entire company is chained to one guy's mood, attention span, and potential ketamine proclivities. They call that the key person risk. Elon calls it being fun. This isn't their first fight over his paycheck either. Norway already voted against reinstating his previous $56 billion package after a U.S. judge scrapped it, only to watch Tesla shareholders approve it anyway. After that, Musk reportedly texted the fund's CEO that friends are as friends do, and he wouldn't be doing any favors until they made amends, which is the billionaire version of you didn't come to my birthday party, so I'm not coming to yours. Now, the stakes here are obviously much, much higher. Musk has warned that if he doesn't get the mega package, he might step back from Tesla or shift more of his focus elsewhere, which is a fun little hostage note to attach to an SEC filing. Norway's fund, on the other hand, is playing the long game here, emphasizing pay discipline, governance, and not letting any single human become too systematically important to the company. Now, they're not organizing a coup exactly, but they're still saying they want constructive dialogue with Tesla, which is Scandinavian speak for, we're disappointed, but we're not angry. Whether Musk ultimately wins this vote or not, the message here is quite clear. Even some of the biggest, most passive institutional investors in the world are reaching their limit on celebrity CEO mega packages that look less like compensation and more like an entire asset class. And because apparently owning the biggest satellite fleet on Earth wasn't enough, Elon Musk also made his way into the news because he now wants to dim the actual sunlight. Yeah, on X, Musk said his satellites could literally fix climate change by controlling how much solar radiation hits the Earth. He called it solar radiation management, which sounds more like a Bond villain's pitch than an environmental plan. Musk claims that a large solar-powered AI satellite constellation could tweak how much sunlight we get, cooling the planet just enough to avoid global warming, or as he also mentioned, global cooling. So basically, he wants to turn the entire planet into a thermostat and give himself the remote. When asked how he'd balance that across different regions, seasons, and, sovereign nations who might not enjoy their sunlight being rationed, Musk replied, yes, which is definitely not the answer you want to hear from the guy proposing to literally block out the sun. Now, to be fair, the idea of solar radiation management isn't exactly new, but experts call it wildly impractical and borderline insane. You literally need thousands, maybe millions of reflective satellites, each the size of a house, coordinating perfectly to bounce sunlight off of the atmosphere without throwing global weather patterns into complete chaos. Even then, the price tag would run into the multi-trillions. And the existing 9,000 Starlink satellites, well, yeah, those can't be retrofitted into giant space mirrors, unfortunately. They're built to beam the internet, not play God. So no, we're not quite ready for Musk to cosplay as Mr. Burns blocking out the sun over Springfield just yet, but his comments do show how far the tech will fix everything crowd is willing to go, even if it means turning Earth into the world's most expensive science experiment. We're taking a quick break, but when we're back, more Blockchain Report coming your way, so stay tuned. We'll be returning right after this quick break. All right, we're back with more of this morning's breaking news. As you know, we've seen Bitcoin drop pretty considerably this morning, around 5%, currently sitting around 100 to 101K. Are we going to be visiting some sub 100 levels, the ultimate discount that we may never see again? Very possibly, and we're keeping an eye on that, as you should too. Let's take a look and see what market sentiment is looking right now on X, because as we know, X is where the cryptoverse lives and breathes. So let's get some insight from what things are looking like from other people right now. Let's take a peek here. So right now we've come to the time that 100K plus Bitcoin is considered bear market territory. We're still early here, folks. He's right. Remember, we have people much smarter than you or I who have predictions of $1 million Bitcoin, $10 million Bitcoin, $20 million Bitcoin. So when you scale this back, as you should always be doing with BTC, this is just going to be another blip on the radar when it's all said and done, but it's a good opportunity to stack some Satoshis at a discounted price. Not financial advice, but hey guys, the writing is on the wall. Next up here, we have from Lunar Crush Social Analytics. They're saying Bitcoin is now down 20% from all-time highs. Remember, we saw 126K just about 3 weeks ago. But they're asking, the next move, is there going to be a new all-time high in 2025? Higher, but no new all-time high in 2025. Are we going lower, or is it takes out the 2025 low? Ooh, this is tough. We've seen a lot of crazy macro casts right now, and I think the price that we're going to see toward the end of the year is entirely dependent on where or how certain things are settled, right? Are we actually going to get real stuff coming out of these alleged trade negotiations with China? Is this just lip service, or will we see some real implementation of new fact? I know we're supposed to cut down their tariffs by 10%, but how will this actually play out? That's definitely one thing. We're seeing the government shutdown is running on day 33, 34. There is no real data to really analyze how things are going right now, so we need some clarity on that end, obviously, right? And we've seen some institutional outflows from the ETFs market in the last couple of days amidst all this chaos. We still have the war in Ukraine, still very much a thing that nobody seems to talk about right now. So right now, the world does seemingly feel on fire. The Bitcoin's only down 20%. Remember, back in previous cycles, this could have been a 30 to 70% drop. So maybe 20 by comparison isn't so bad. Just something to think about. So with that being said, what do I see for the next move? I do think we're going to see new all-time highs at the end of this year, but I think they're going to be a lot lower than we thought. As you saw earlier in the show, we have price predictions that range from 130 all the way up to 443. I myself thought we'd finish the year around in the 140s. I could see this year us barely eclipsing the current all-time high. Maybe even we fall a little short of it, that 126 marker. But I don't think the bull run is over. I think it's going to extend indefinitely through this year as this whole situation in the cycle narrative has changed because of all of the developments we've seen from governments and specifically institutional players in the space. So it's a slow grind up and to the right. I don't think we're going to see those parabolic rallies of yesteryear. Certainly makes it a lot less sexy and fun, but what we're seeing is Bitcoin finding its place in the traditional markets, and clearly it's here to stay. A $2 trillion asset. Come on, guys, it's not going anywhere. Let's scroll down X here and see what else is going on here. This next one from John White says that Bitcoin thrives on this pattern and history proves it, and he's doing it in all caps like Don Juan does, so you know he means business. He says each retest of the trend line we're seeing here is a launch pad for some epic surges, and he's saying surges of 90, 183, 108, and 63%. He's saying we are round 4, identical blueprint, mirror image mindset, explosive upside ahead. The dip is your entry, paper hands full here. So this might be a chart worth revisiting on your own time to see if you think this is how things are going to play out for the rest of this year. Let's scroll down a little further. We have the Joker says, what happens now for Bitcoin? I could see us going beneath 100K in the short term. I think that's very possible, but you're going to see that buying pressure kick in eventually, probably around the 94 arena, if it even goes that low. The writing is on the wall here, gang. This is not a speculative play the way it once was. This is the rails of monetary infrastructure in the future, and there is enough business leaders out there, there is enough government leaders out there that see it that way, that there's no doubt that is how things are going to be playing out. So could it go beneath 100K? Absolutely. Will it stay beneath 100K? Absolutely not. We know where it's going. All right, let's keep scrolling down here. Another one, this guy's feeling bullish, last chance to buy Bitcoin, above 100,000. So this guy actually thinks the opposite. He thinks we're going to be seeing lower prices in the not distant future, which is possible, but long term, we're going to look at 100K and just a couple years from now and be like, dang, man, I should have sold my car and bought more Bitcoin at those prices. All right, let's scroll down here. Matt Saylor's chiming in. Maybe Michael Saylor's long lost brother. He says as Bitcoin hits support, the dollar is hitting resistance. If both hold, we should see a decent bounce for Bitcoin. Another thing we didn't talk about, inflation is running rampant in this country in a way we haven't really seen before, right? And we need to be protecting ourselves because it's not fair to work for money that another man can just print. And Bitcoin solves that, gang. So inflation, yeah, the dollar, the Dixie is not doing too hot. So that's going to help Bitcoin's price. So that's what we got from X. Now it's time to see what our robot overlord friends are up to and a little bit of AI, AIO. So let's run the stinger and get to camera 1, guys. All right, welcome back. It's time to see what our robot friends are up to in some AI, AIO, so let's do it. First up, ChatGPT, once the world's favorite all-knowing chatbot, therapist, lawyer, financial advisor, etc., has officially been muzzled, as new rules mean no more personalized medical, legal, or financial advice. Literally everything I use it for. Or in other words, if you were planning to ask it whether that rash you have is contagious, or how to hide money from your ex, or whether to short Tesla, you, my friend, are now officially out of luck. OpenAI has rebranded ChatGPT as an educational tool, not a consultant, which is corporate speak for we like profit, but not lawsuits. So ChatGPT can now explain how things work, but it can't tell you what to do. And in other news, I want you to meet my new friend, Neo, the new humanoid robot that promises to handle your chores, hey buddy, your errands, and maybe your privacy settings too. This $20,000 AI-powered butler can open doors, fetch items, and turn off the lights. Basically everything your teenager refuses to do. But here's the twist. If you want Neo to handle anything more advanced, like, for instance, folding laundry or loading the dishwasher, you'll need to be okay with a human teleoperator remotely controlling it and seeing inside your house. Yeah, to train its AI brain, real humans will literally be driving your robot around your home via camera feed. So if you thought your Alexa was invasive, wait until you have a Norwegian engineer watching your Roomba learn empathy. CEO Bernd Bornick told the Wall Street Journal that if we don't have your data, we can't make the product better, which is Silicon Valley speak for we'll clean your floors if we can also steal your digital footprint. And the company swears the robot has multiple security layers to ensure it doesn't hurt anyone, which sounds exactly like something people say right before it hurts someone. Now, for those of you who want early access to Neo, you can either drop 20 grand or sign up for the low price of $499 a month, because what is one more subscription when it comes with potential surveillance and a light dusting? All right, we're taking a quick break, but when we're back, we're going to wrap up today's show with a little bullish, bearish, or BS and see how things are trending for Bitcoin on this not particularly good number go up day. But I got a feeling things are going to be just fine. So stay tuned. Bullish, bearish, and BS coming up right after this. Wish you could grab cash without selling your Bitcoin? Yeah, same. But hey, that's why Ledn exists. They're the global leader in Bitcoin-backed loans. Over $9 billion issued since 2018 with a perfect record protecting client assets. Now, what makes a Ledn loan different, you ask? Well, with custody loans, your collateral stays put. They don't go degen and lend it out for yield. There are no credit checks. It funds in under 6 hours. No monthly payments. You can repay anytime with 0 penalties. And for transparency that grown-ups actually want, proof of reserves reports every 6 months verified by a top accounting firm. Bottom line is Ledn lets Bitcoin holders unlock liquidity without selling. And you can check them out over at ledn.io/RoxomTV. That's LEDN.io/RoxomTV. All right, boys and girls, we're still on camera one. Here we go. So, breaking news. Again, we are keeping track of Bitcoin's price movements today, and it has been a tough one. We're down about 4.5% this morning. Currently, the Bitcoin price is still hovering above 100K, around that 101K marker. Now, as we mentioned earlier in the show, short-term volatility right now seems to be the name of the game. We have all of these macro events going on around the world that are clearly pushing people away from what are still considered to be a risk-on asset like tech stocks and Bitcoin currently, and it's moving their money into other places. People are keeping cash, safe havens, typical safe havens like gold and silver, etc. So right now it has been a pretty brutal market. We're down about 20% from Bitcoin's recent all-time highs of 126K. So unfortunately, as far as our bullish, bearish, and BS segment today goes, today is feeling a little bullish, or bearish, excuse me, definitely not bullish, as we've seen a 5% drawback. Again, I think this is just some short-term pain that's going to be leading us to some more long-term gain, especially as we make our way through Q4 here. So again, it's 101K today. I got a feeling we're going to see some higher prices tomorrow as the market kind of corrects itself after this pretty significant pullback. But until then, we are wading in some bearish waters on this Tuesday. But hey, that's okay, because tomorrow is Wednesday, and I got a feeling things are going to be a little bit better. As always, though, gang, I want to thank you all so much for joining us on today's episode of the Blockchain Report. We're here each and every weekday morning bringing you what's hopefully some of the best and interesting signal in the Bitcoin and world news markets, and we certainly appreciate you joining us to learn and educate yourself about what is going on out there, because the world's a crazy place, and you got to get your news somewhere. We appreciate you doing it with us here. So as always, if you haven't already, please make sure to do us a little solid for all of our hard work. We get up at 4 a.m. just for you. And make sure to like, follow, and subscribe to RoxomTV, to the Blockchain Report, and me at Hank at RoxomTV, wherever you choose to do your online scrolling. And we'll be back tomorrow, same time, same place, with more of the same crypto chaos and Bitcoin bedlam that you've come to expect. So thanks for watching, and as always, stay safe, stay informed, and always be sure to huddle on. See you tomorrow.